Hey everyone, Daniel here and welcome back to another video. We just got some major clarity when it comes to unemployment data, and that gives us big news when it comes to inflation expectations and the implications that may have on the market going forward. So in this video, we're going to talk about exactly what happened, the potential impacts it has on stocks, crypto, and the markets as a whole, and exactly how I'm reacting to this news going forward. So if you enjoy these videos, please consider subscribing and let's get into it. US gains. Disappointing 266,000 jobs in April, but all signs still point to faster hiring in months ahead. This is a situation, before we get started, I want to make this very clear, of bad news being good news. Why? The unemployment rate actually rose from 6% to 6.1% in the month of April, pointing to a very disappointing month of April when it comes to the total United States economy. If we look at what essentially Wall Street was expecting when it comes to the unemployment essentially gain or the new job gain that was expected in the month of April, Wall Street had forecasted 1 million new jobs added to the United States economy in the month of April. What we saw was a situation where obviously we only had 266,000 jobs. That's not half. That's almost a quarter of what Wall Street was expecting. Very disappointing. Now, what is the potential implication that this has on the stock market? We'll take a look at treasuries and cryptos in a second here. When we look at the whole situation that we've had in the stock market over the past few weeks here, we've had a major dip in a lot of high growth, high valuation names. Why? Because of the potential for inflation going forwards. We had a person like Janet Yellen, the Treasury Secretary of the United States, came out and said, you know what? Inflation might arise faster than expected as the economy overheats, potentially causing us to raise interest rates going forwards. Now, obviously, on the other end, we have someone like a Jerome Powell, the chairman of the Federal Reserve, who says, you know what? This economy is not going back to normal for at least the next couple of years as we continue to exit out of this pandemic. It is going to be a long, hard journey. And because of that, the economy taking potentially a year or two to actually get back up and running, inflation most likely won't come, not forcing us to raise interest rates for at least the next year or two. So what we got here today was contradictory to what Janet Yellen said a couple days ago, but in agreement with what Jerome Powell said. And if you're a stock market investor, you want Jerome Powell to be correct. Because if Janet Yellen ends up being correct and the economy essentially returns back to normal within the next few months here potentially, we could see a major spike in inflation data because of obviously, the economy, velocity of money, getting back too quickly to original levels. If Jerome Powell is correct, though, which this data does suggest, the potential for inflation decreases substantially as the time needed to get out of this pandemic decreases alongside that. So what did we see today? And potentially like the US Treasury Yields. This is obviously a big indicator and was one of the main reasons that the stock market dropped so much back in March. Obviously, we know that as interest rates rise, as the Treasury note rises, stocks tend to fall. What did we see today? Immediately after this news was announced at 8:30 p.m., we saw a major dip in the 10-year Treasury note. Why? Because inflation expectations are dissipating. People no longer expect the inflation that we originally saw. Potentially the fear hasn't completely subsided, but this news event that we got here today is a significant kind of addition that makes clarity when it comes to inflation, when it comes to the market, much, much stronger. And looking at the 10-year Treasury note here, although it has recovered, it is still lower than what we saw earlier. And as this decreases, obviously we saw something like the NASDAQ increases alongside it. When we look at something like a Bitcoin, obviously we know that Bitcoin is said to be an inflation hedge, but it's interesting to see that immediately after this inflation data was reported, we saw a spike in Bitcoin by right around $1,000. Very interesting. And again, I'm not going to add too much commentary to this, but it's very interesting how Bitcoin is almost acting parallel to something like the NASDAQ when it comes to a reaction of this situation. Overall, what am I doing? This is very positive news, guys. If you're involved in the stock market or any of these high multiple names, this is very, very good news when it comes to inflation data. As I've said before, though, the fear of year-over-year data or inflation comparisons is still there. So going forwards over the next couple of months, as we get CPI data, the year-over-year comparisons will be high, which might cause a bit of panic in the stock market for at least the next few weeks or potentially months. But this data that we got here today provides major clarity, especially in the situation of inflation, that we are most likely going to be in agreement with Jerome Powell in the sense that the recovery that we are about to see will most likely be elongated, causing interest rates, inflation to stay low alongside that. So anyways, guys, thank you so much for watching this video. If you appreciate this content, please consider hitting that subscribe button, and see you guys next time.